Welcome to The Deal, our quarterly outlook for global and UK M&A markets. What's been going on in the M&A market? Well, geopolitical uncertainties, rising interest rates, inflationary pressures, and market volatility have meant that the number of £2 billion plus mega deals has fallen away markedly in the first 6 months of 2022, from record levels last year. Deal flow in the mid-market has remained remarkably robust, and we see that continuing in the second half of this year. The number of mid-market deals announced in 2022 until the end of May was only marginally lower than in 2021. In the UK, 150 mid-market deals have been announced so far this year, compared to 158 deals in the same period in 2021. A number of factors are driving strong M&A volumes in the 50 to 500 million EV mid-market valuation range. Despite recent rises from near zero, interest rates remain low compared to historical averages. As a result, insurance and pension company investors continue to search for yield, pushing large volumes of capital into private market M&A strategies, including private equity, real estate, and private credit. Between 2021 and 2022, private equity deals have been on a particularly impressive run and continue to grow their market share of the total M&A market. Overall value of private equity funded deals has doubled on a year-on-year basis in 2022, and today private equity is sitting on more than a record $1.5 trillion of so-called dry powder, committed but as yet uninvested capital, and it's keenly looking for investment opportunities. So despite volatility, we see ongoing really strong tailwinds underpinning M&A activity for the rest of 2022. Mid-market activity has also remained strong across a range of sectors. Up to May this year, mid-market deals globally accounted for 10% of total deal volume and 21% by value. In part, this activity is being driven by sellers' perspectives that the downside risks to valuations are mounting, and the arguments in favour of moving a transaction timetable forward probably outweigh those in favour of waiting until next year. Whilst you're seeing valuations softening right now in some sectors exposed to inflationary pressures, deals are still closing, and 2022 overall will be another very strong year for M&A activity. What are the biggest themes driving M&A activity? The technology sector has been very active as companies look to M&A to accelerate digital agendas, and it accounts for over 29% of all transactions globally and 27% of transactions in the UK, with average EV to EBITDA valuations now exceeding 20 times. Key drivers underpinning tech M&A include the adoption of cloud-based systems, the commercialization of the Internet of Things, robotic process automation, and virtual reality technology. Fintech, cyber, B2B software, 5G telecoms, data storage, and pharma are all very hot areas for investors in 2022 as companies look to acquire expertise and products. More broadly, global supply chain disruption and the conclusion that that's likely to continue for some time is leading companies to use M&A to diversify sourcing channels. Travel and hospitality have also enjoyed a strong resurgence in 2022. Let's talk about environmental, social and governance and how it's affecting the M&A market. A broad range of companies are looking to M&A as a means of driving their ESG agendas, either through the disposal of old technology businesses and assets, or through the acquisition of new net zero technology. This year, record levels of ESG funds have been raised, and this looks set to be a big driver of M&A going forward. Deal volumes for sustainable deals grew 19% this year to 524 transactions. M&A investors are increasingly focused on companies' verifiable ESG credentials. These have been high on the list of targets from SPACs with strong institutional demand encouraging a wave of new sustainable investment SPAC IPOs. What's the M&A market's outlook for the second half of the year? Well, much will depend on how long current geopolitical uncertainty lasts and just how much long-term inflationary pressure builds into the wider economy. For those looking at deals, consider what your exposures to inflationary factors are. Certainly, we've seen a range of deals being paused or pulled in recent months as business plans have been rewritten because of rising energy costs, broken supply chains, rising labor and raw material costs, and general market uncertainty. For those reasons, we see market support dividing in the second half between those deals with limited exposures to these pressures and those where the gap between sellers' price expectations and buyers' views on value widens. Historically, when those gaps have developed, market activity has reduced. While we foresee that happening in the second half of 2022 for some sectors, overall M&A activity will remain very strong. Given the US dollar strengthening in 2022, we see ongoing particularly strong interest in UK PLC from US investors who now perceive that the UK is offering attractive investment opportunities. We anticipate more public to private activity in the second half of 2022, driven by overseas and private equity deals activity. As a result, more companies will need developed strategies as to how they'll respond to bid approaches, and we'll closely monitor this trend. Thank you for listening. I look forward to speaking to you in the autumn.